July brought the sharpest price drop of the year in Denver's housing market, even as more buyers were active than we've seen in the past 2 summers. High inventory, easing mortgage rates, and the seasonal slowdown are all colliding right now, and is creating a very different market than we had this spring. Stay tuned to see what this means for buyers and sellers, and to hear what I expect to happen as we head into the fall. I'm Nathan Hart, Realtor with HomeSmart. Each month I break down the key housing trends in the Denver metro area, from mortgage rate movements to the local market shifts, and I share my forecast for the months ahead. Let's start with the latest on interest rates. According to Mortgage News Daily, as of August 5th, the average 30-year fixed-rate mortgage was 6.58%. That's down from 6.81% in early July and marks the lowest level we've seen all year. What caused this drop? The July jobs report came in lower than expected, with just 73,000 new jobs added, and with downward revisions to previous months. This softer labor data pushed bond yields lower and mortgage rates followed. Political uncertainty, including the dismissal of the Bureau of Labor Statistics director, also had investors moving towards safe haven assets like treasuries, pushing rates down even further. Many analysts expect rates to hold in the mid-6% range for now, with a chance of slipping lower if the labor market continues to cool and inflation improves. July's activity was higher than the same time last year, and the year before that. Both pending sales and new listings were stronger than we've seen in recent summers, but sellers are still outpacing buyers. New listings exceeded pending sales by over 3,000 units, and historically high inventory is putting pressure on prices. The median close price fell sharply to $565,000, wiping out half of this year's earlier gains. With rates at their lowest point of the year, buyer activity could tick up in August and help absorb some excess inventory. Still, we're heading into the seasonal slowdown when both sales and prices typically trend lower. With July prices dropping so sharply, I expect prices to remain steady or rebound slightly in August before continuing their usual fall decline. From the June peak through January, I'm forecasting a total drop of 5 to 7%. Bringing the median price back to $540,000 to $550,000 range. If mortgage rates drop into the low to mid 6% range, demand could be strong enough to limit that decline to 3 to 4%. But if rates climb back near 7%, affordability challenges and high inventory could lead to a steeper drop, possibly 8 to 10% below the June high. For sellers, the spring and early summer window has closed. Listings should now be priced strategically and presented well to compete in a more crowded market. Expect longer market times and more price-sensitive buyers. For buyers, conditions are shifting in your favor. Higher inventory means more choices, and easing rates means more purchasing power. The best value opportunities will likely appear between late August and November before winter slows the market and tightens supply. I'm Nathan Hart with HomeSmart. If you're planning to buy or sell, now's the time to prepare your strategy. Contact me today and let's talk about your goals in this changing market. Thanks for watching, and I'll see you next month for another Denver Metro housing market update.